Hello, guys. It's been long. It's been a minute since I did a analysis or do something on this channel. But if you take a look at what I did previously, I think I can't really remember, to be honest, where we left it from. But I remember it was something to do with price action. So I'm gonna begin with what's happening with gold right now. Right now, we're in a short-term bullish market, meaning that price is currently pushing higher, and this is happening after we took some liquidity over here. You see price closed back in, and now we're pushing higher. So our drawn liquidity, or where we're targeting, is definitely this high here, this high or this premium level of this cap. Once we tap here, actually, I would like it to retrace a little bit higher. I'm expecting price to hit around 5,100 before we drop. So apparently that's what's happening, but gold is going down. It's just a matter of retracement. Then we push lower, maybe towards I don't know, around 3,000 there. So that's what's happening with gold right now. On the other hand, I want us to move into lower time frames, and I would like to discuss something about trading. So trading in a manner that we've never or somebody has really never talked about it in many ways. For example, the fleshly desires that usually hinder traders from profitability and success, and also the identity issue or the identity problem, because sometimes if you identify yourself as a losing trader, of course you're going to be a losing trader. But if you identify yourself as somebody who's a winner, whatever you do you always win. It becomes way better for you as a trader, and that's an issue of identity shift. You have to every day visualize as a consistently profitable trader. You have to every day visualize that you're doing better and you're doing good. So this being said, I've been thinking, what if I begin some, trader consultancy, whereby I get to analyze you as a trader. You give me the details of where your trading currently is. I don't really care about whatever strategy you're trading, even if you trade double tops or double bottom. I don't really mind, because I know all how those strategies work, between liquidity, between smart money concepts, retail concepts and so on. I don't really mind. Even if you trade quantum, concepts and so on. So I could just analyze your performance based on the trades you take. So meaning that if before you take a trade, you analyze and you let me know, hi, I'm planning of doing this and this and this, then I could analyze your chart and tell you there's a problem of so and so and so. There's some few things you need to adhere to, and in terms of risk management, in terms of emotion. So in other terms, it's more of an accountability person, whereby you get to contact me for that, and I get to analyze what you're doing. And you see, this I cannot really do with this with a lot of people. Maybe a couple of, even five people is way too much. Maybe just three people, whom I can be able to to work this on. And I'm thinking if maybe I can do this, but of course I have to, because my time is. I have to put a little bit of it, and it's going to be something way little that somebody doesn't really have to to struggle with. Let's talk about $200. So $100 upfront, and the remaining $100 after maybe after a month or 2 months, when you're fully ready, and now you have mastered yourself. You know where your problem is, because I've been seeing some traders online. When you go to X, I have a name there, Stop Loss Hunter. That's just I'm trying to make some jokes, and most of the time I see traders posting their setups, and most of them, almost 90% of them, whom I usually want that this trade is gonna lose, always end up losing. So, and some of them usually feel like I'm being a bad guy, I'm being a bad person. When you want somebody that you're gonna lose money, then they end up losing money, then they're gonna question like, who is this guy? Why did you say that? I ended up losing money. And I've been having these issues with a couple of people, up there. And I was just thinking, what if now, because from the look of it, a lot of traders, I think most of you guys have been learning from the wrong people. And you see, that's part of the loss. Because if you learn from a person who doesn't even understand what is teaching, for example, if I trade ICT concepts, and ICT is not a person to be understood easily. You have to take your time. You have to. ICT has hidden a lot of issues, a lot of factors in his lectures, and not only ICT. So if you are listening to somebody who don't even know what a breakout structure is or market structure shift is properly, and these some of the mistakes I did during my early days. I personally lost a lot of money, trying, because definitely I do, breakout structure or market structure shift wrongly, liquidity, drawn liquidity. I used to spot it wrongly. So you really have to know exactly what you're doing. Because if you're losing and you're doing it correctly, then that makes sense. But if you're losing because you're doing it wrongly, then doesn't really make sense. Definitely, the person whom you've been learning from doesn't even know what they're doing. They're only after your fees and so on. Trust me, everything that's happening in this chat right now was initially warned, or price action had warned that I'm about to do this. Now you see, unfortunately, a lot of people, for example, a lot of people here were very bullish on gold. Okay, and a lot of people were buying from here. They're expecting to gold to hit, $10,000. So they're trading based on fears and emotions, and that dopamine rush and so on. And they're seeing geopolitical factors. They're seeing Bitcoin crashing. They're seeing the dollar, is crashing, and they see that gold is automatically going to the moon. But unfortunately, gold just hit all-time highs this year. Now, this for sure, there had to be something that has to happen, because you see, as of right now, we're in the age of World War III, and we're having a lot of geopolitical factors which are really, really, happening. Trust me, this drop that you see over here, guys, if you really knew how to read price correctly, you would have seen it. The only difference is that you wouldn't have known whether it would really drop this massively, but at least you'd have taken advantage of it. Because see, for example, this drop happened on Thursday. Thursday, we usually have reversals. Let's take a look at this one. This one is Tuesday. That's manipulation. Most of these reversals, this also, Thursday. So Thursday, we've been having drops. This is another Thursday. Thursday, we've been having drops. It's about backtesting. And you see, a lot of idiots out there go tell you that you don't need to backtest. Now, take a look. If you don't backtest, for example, what I'm pointing out right here, how will you be profitable? Because you don't know even what Thursdays usually do. Because Monday gives us accumulation, Tuesday manipulation, then Wednesday we have distribution, or delivery and so on, and then Thursday gives us reversal. Then Friday we'll do either both, with either reversal or continuation, right? So you see, this happened right here. This was reversal, and you see this was a sign when candle closed back in with for bullish and candle closes back in, meaning that the next candle is likely to push lower. So meaning here you are supposed to be looking for sales on the lower time frames, and I'm very pretty sure if you move into hourly time frame, you would have seen signs like break of structure to the downside, bearish fair value gaps. You've seen things like market structure shift and so on. Pretty much the same thing over here. After tapping liquidity, all these points, and remember, I told you guys, it's all about, if you don't have the eye to really see what's really happening, because take a look at this date. This was Monday, 2nd of February, and take a look at where we stopped at. The very, very first day of the year. This is the high. This one is the high of Friday, second January, 2nd February. Don't you do you think this is just coincidental? No, this is not where time and price come and align together. And now you see, you will not see these things if you just look at things randomly. You have to pay very, very close attention and understand, like, for example, why is this happening, what's happening here. And as you can see, this candle took liquidity over here, and went and back and closed back in. That was a sign that we are likely to push back higher. And when we went over here, went back to this order block, as you can see it. After that, you see, we had a displacement to the downside, meaning that now we were interested in pushing lower, and this is what has been happening right now. What you're seeing right now is just a retracement, just the same way we had one over here before we push again lower. So if you're learning from the wrong person, if you're learning how to do this wrongly, because there's a lot of information out there in the internet that everybody's a guru, everybody's is looking for this, then at the end of the day, they confuse you, or they teach you things that don't really work, or things that doesn't really go well with trading. These are some of the things that I might be looking for as a consultant, or as somebody who is unaccountable of you as a trader, what you're doing. And if you end up not being profitable after a month or 2 months, then that's gonna be a really, really big problem. Because if I dedicate my time for at least two, or let's say three people, and I fully, I get down one on one. It doesn't matter wherever you are, all over the world. We can always, do Zoom meetings, and so on, and just discuss about the markets, and discuss about the strategies and what's happening here. And I don't think, and you see, it's not only about strategy. You see, for example, if you're trading double tops, I'm not gonna tell you, yo, stop trading double tops, stop trading patterns, because, for example, here, this was, double bottoms right here, and you see price pushed high. Unfortunately, if you're buying from here, maybe you're targeting from here, or maybe here, it never reached there. So meaning that there's a few things that have to put in, to awaken you in terms of liquidity, and so on. But I don't really mind even if you trade trend lines, because you see, for example, if we draw a trend line right here, let's assume you're a trend line trader, you draw one like that. You see, we had a break right there, and you see this was the sign that price is interested in going down. Now, unfortunately, the problem is that now you're not sure when was this. For example, if you just sold it from this candle after this breakout, put your stop loss right here. You're gonna be stopped out. Not unless you sell it from here. You put your stop loss up here and you take it down here, which your reward ratio is very little, and you see it's gonna take months. Take a look at this. This is gonna take months for you to even achieve, your goal. So as much as all these concepts they do work, and I understand how all of them works. You see, for example, over here we have a break right now. So some people might think that yes, we are buying, so we are targeting this highs. Unfortunately, my guy, that's not going to happen. Gold is not going to tap this high. You see this high over here, this is not likely to be tapped. I can't really use the term it cannot tap, but it is not likely to be tapped, because in terms of liquidity, we have a lot of opposing liquidity to this PDR right here on this premium level. We have a lot of opposing PDR, because if we grade this one, if we grade this from premium to discount from this range here, we are currently at equilibrium. And on the premium side, we have a lot of PDRs that is supporting sales. So these are some of the things that I can just add into confidence. That now, that being said, now let us dive into today's price action. So as I've told you guys earlier that I'm looking forward some sells and sorry some buys to the upside before we push lower. And as you can see, price action has been really bullish. And over here, I'm expecting today for us to create a new gap. I'm expecting a new gap at this level. This new gap is going to be supporting the bullish, movement that we're having over there. So what's happening apparently right here, this sell that you're seeing, or this sell off, it was not just random. This was a gap. We had a gap right here, and it was not just a gap. This was a breakaway gap. Price only came and tapped liquidity right there in that breakaway gap, and that's why you're seeing this reversal. So tomorrow being Thursday, I'm expecting, if today we close bearish, I'm expecting tomorrow as Thursday, we either push higher or fill this gap, then push higher. But I'd like to see this gap remain untouched until next week. So next week, when Monday comes in, or Tuesday, we have that manipulation towards this gap. The same thing that happened up here. You see this one, this Thursday, we dropped down here, and we filled this gap, and we respected it. As you can see, we really respected this gap. This shows that sign is interested in going higher, but also it is also respecting this PDRAs, meaning that it doesn't want to do anything down here as of now. Yes, geopolitical factors can come in. You might hear Trump saying something, but guys, trust me, a logarithm will do or will deliver price according to what it has already planned, not because now Trump said something or because somebody said something. What a logarithm does is just it looks for a PDRA nearby, which can fit into that market condition. Then it rushes there and increases, like that's the moment we have a lot of increase in volatility, and that's where people lose money in terms of uh, those market behaving in certain type of way. But everything that you've been seeing happening, for example, this drop that you saw happening here, this massive drop that gave us this house, if you go back to it closely, I think this is it, guys. If you take a look at it closely, I told you guys that if you're paying attention to what price did here, we were creating higher highs, we were pushing higher, then all of a sudden we create what, a low and a lower low. All of a sudden, this is being backed by a bearish gap. This was saying that this price wanna go lower, there's something going on. So what do? You wait for price to retrace into the gap, then sell it. As simple as such. And this is how we ended up having all this move. You see, we ended up creating lower lows all the way. Then over here, instead of having some structures trying to push to the higher side. But now if you take a look on how daily time frame or higher time frames, you'd be able to understand that this was a setup. So over here we had more of a just a consolidation for the same level for days and so on. So this is where when you trade ICT, you hunt liquidity. You, for example, there's a swing high right here being taken out, you sell it targeting what, some swing low, for example this one or this one. Now once this one is has been taken and you see price closing back in, you look for buys, target what, target this PDRAs, for example this bearish one. Once it is filled and you see prices is closing back in, you wait for market structure shift, or break of structure to the downside on lower time frames, you sell it targeting this opposing P area. And the same thing, it comes over here, takes this liquidity, wait for the candles to close back in, you buy, once we have those bullish, P areas formed, like fair value gaps on 15 minutes and 5 minutes, and price comes back to retest it, targeting this P areas above here. And you see that has been the move all this long. So as much as, if you're a trend trader, this would not be really such a good place for you. But if you understand liquidity, this will be way, way better for you. So what's happening right now, right here, we're currently having, a pushback to the downside. But as you can see, we do not have any bearish gap supporting this move. Anytime you don't see bearish gap supporting a move, just know that this is weak price action. This is a raw, like this a low resistance liquidity, meaning price will just run this up anytime, any day. So on the other hand, we do have a bullish PDRA right here. We have a hourly fair value gap. So what do you expect? We expect price to come and take some liquidity down here, tap into it, then push us higher. Remember, also on daily, I'm expecting some fair value gap to be formed in this time frame here. I'm expecting us to have a gap. So depending on how price is going to behave on this gap from tomorrow and the day after, which is Friday, will determine whether we're going to be dropping to take something low here, which I wouldn't like to see. I'm not really, I don't want to see price coming down here anymore. That will be just something else. But here, because of manipulation, that can happen because this is liquidity, and this is money resting below here. What I would like to see is this PD raise, these ones on this premium level are attacked first. And if these attacked first, we're going to be taking a look at how does price react to this area. If we attack this and we end up, closing bullishly against it, meaning that we disrespect it, the next PD rate to be the target is going to be over here and over here. So these are the zones whereby, I'm looking closely, or depending on how we behave here. But I won't like us to, to create bullish PDRAs and leaving them completely open. You see, for example, this one was never left open. We just created it, then the next day we came to fill it, then we push higher. The same thing I'm expecting here. If this take too much time, then I'm expecting next week this PDRA to be, for price to come back and close it. So that being said, that's the current, price action that I'm looking into. But I've already told you guys why we are dropping over here. You guys have seen it. This was a breakaway gap. This is now daily time frame. We had a gap here. But what type of gap is this? This is a breakaway gap. With the breakaway gaps, you don't expect price to go one time to go and fill it. We took some liquidity over here and we sell it. So some people are already selling it here and they're targeting to take their profit down here. They're gonna get stopped up. This is not how you do it. That's not how it works. On weekly time frame, we've taken something serious down here. So price action is, we are creating higher highs. We're not creating higher lows. But unless we change structures, then that especially if it is backed by a gap or something like that, then we have to put into consideration whether we're likely to to push lower. But according to what's happening here, I'm expecting price to continue taking this liquidity up here towards somewhere around here, around 5,300 or 5,100, before we now have a drop. What I would like to see is this high being taken. So if you're a swing trader, wait for price to come to this area, put your stop loss right here, enter around that 5,000 area, and target these lows, target down here. So that's it for price action for today. In case you want to reach out for for consultancies, and if you want us just take a look at your trading journey, what has been happening, for how your trades and how your setups has been, you can always leave me an email. That's rockykashline@gmail.com. I think I have an email on this account. I'll check on it, and see you guys in the next one. Have a great day.